Good morning, all. Welcome to our market outlook. First of all, let me start with a brief review. Pressurized by weak global cues, Indian equity benchmarks snapped Friday's trade in the red terrain with both the Nifty and Sensex hitting 7.5 week low. Indices traded choppy throughout the day as investors booked profit at every rise with an eye on the group of nations, G20 nations meet. Nifty ended below the psychological 5,900 mark for the second day. The index closed at 5,887 after hitting the major support zone of 5,850, and benchmark indices rebounded from that range. Sentiment remained dampened from the beginning of the trade as investors reacted negatively to the SEBI's action of imposing a total penalty of 30 crores on 118 companies, including the promoters, for manipulating practices in the stock market. Lower than expected quarterly earnings from some blue chip companies also triggered selling. Selling got intensified in the mid-noon trade after global rating agency Moody's warned that India's expanding current account deficit and external debt will make the country more vulnerable to international financial volatility and have negative implications for its sovereign credit profile. Investors stuck to trading in stock-specific. Tata Motors bounced back on short covering, and Street remained optimistic about the future growth of its UK Jaguar Land Rover, which could offset its sagging Indian operations. Short covering was seen in the some of the index majors such as JP Associates, the State Bank of India, and Wipro. However, profit booking weighed on shares in the oil and gas space. Hind Petrol, Reliance Industries, BPCL, and Ken India fell 1 to 2%. Bucking the trend, shares of sugar companies rose 2 to 9% as Food Minister KV Thomas said a decision on partially decontrolling the sector is likely in 15 days. Coming to today's outlook, indices are seen opening flat and tracking subdued overseas market, with immediate support for the Nifty seen around 5,850. Last day, US indices ended largely unchanged on Friday amid mixed cues. While there were concerns over flattering retail sales, the consumer confidence and regional manufacturing activity data was promising. Asian indices are trading green today, led by the Japanese Nifty after G20 meet. Then fall following the G20 summit also gave a fillip to Japanese exporters whose earnings benefit from a weak domestic currency. Also, risk appetite somewhat improved worldwide after positive economic data released from the US on Friday. Back home, action is likely to remain stock specific, with the state-owned oil marketing companies likely to rise after they raise diesel and petrol prices. Can India may also rise on a report that India's got regulatory approval to drill more exploratory wells at its Barmer block in Rajasthan. Jet Airways India may see some profit booking as Etihad Airways has reportedly said it needs to revise its proposed deal to buy a stake in the former, and that is too soon to say when the final pact will be struck. Technical indicators suggest that Nifty may test 5,800 mark this week. But if the Nifty closes above 5,850 for at least two trading section, we can expect a pullback rally up to 5,950 and 6,000 range. And investors also prefer to be in sideline ahead of the union budget, which is scheduled at February 28th. With all this, let me cut short. Thank you. Have a nice trading day to all of you.